Trading. Do you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. Hey there, this is Tim. I want to thank you for dropping by to watch this interview. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO follow-up interview. It's one of my favorite companies. I was just rocking out to them before Rob jumped on. LiveOne, which is fairly recent name change. It used to be LiveX Live, but now LiveOne. Rob, it's been, I want to thank you, first of all, for taking the time to come in and give us an update.
Thanks. Thanks, Tim. Pleasure to get back on.
All right. So lots happened since the last interview that we had. Rough market, right? Not just for LiveOne, for any small cap, micro cap stock, it's been a brutal 15 months, right? I mean, it's been brutal. So I'm not looking at this as necessarily company specific. The reason that I wanted to have you on is to just kind of talk about where you're at, how you feeling about where LiveOne is at, and what you're looking forward to for the next 6 to 12 months.
Sure. So let's start off market conditions, right? So I'm a CEO who's been doing this for a long time. I went through this with my last company, Digital Turbine. I went through this with my company before that, i1.com, in 2000 and 2008. Now, if you remember in 2000, right, it was literally you're skiing down the mountain, right? By the time you got from the top of the mountain to the bottom, everyone was wiped out, right? 70 to 90% of value was dropped in our world, right? Same thing in 2008. Now, in 2000, it took 3 years to recover. In 2008, by 2009, you were hitting lottery tickets, right? You're winning big, right? But you did have to adjust. You did have to adjust your temperature and adjust your philosophy, right, where your business was going. So we moved from when we went public at $4 a share, we were a story stock, right? In March of 2021, we traded almost 100 million shares at $7. We were a growth stock, right? Now we've gone and we're a value stock, right? So what do you do about it? You got to get angry, right? You got to get in the bunkers and you got to fight. And how do you fight? Number one fight is you got to take real costs out of the business. We took $25 million of costs out of the business. Number two is you got to prove that that translates into EBITDA, right? We've delivered $6.4 million of EBITDA, right? Almost a $13 million swing for the first 6 months. And we publicly said for the year, we're going to do 8.5 to 11.5 million, right? That's a $25 million swing. So you're actually proving those cost cuts are actually working, right? And as part of that, you had to make some executive decisions of what is working, right? From an earnings standpoint and bottom line standpoint, and what do you have to push to the back line? So we had to push our live business to the backside, right? We took that and, we had bought React Entertainment and we bought it in February 2020. Probably not my most brilliant move. If I knew COVID was coming, I would have passed on that one. Right. Thankfully, I only paid $2 million for it. And after paying $2 million for it, we took a beating over and over. COVID hits a month later. We had already put our tickets on sale for our big event, Spring Awakening. We then get the COVID variants. We have to change it again. We get the 2 more variances. And we eventually come out swinging, and we bring out Spring Awakening with a massive lineup. It does amazingly well, except we get hit with a terrible storm, right? The 2 weeks before and during the event. And we lose about half our ticket sales. We take a big hit, take a $4 million hit. So, I'm a big believer you got to learn from your mistakes, or just some things are just bad luck, right? We've had bad luck. We had to pull that back. We pulled that back, right? That changes the numbers dramatically, right? And we focused all of our energy and focused all of our capital on strengthening the balance sheet. First thing we did is we extinguished $20 million of payables from our balance sheet in the first 6 months. You can be sure there's more this quarter, right? And more before year end. Okay. The second thing we did is we focused all that energy on buying back stock. We bought back 2 million shares. We've just announced a $2 million buyback, which at current prices is over 3 million shares. And as you know, Tim, the last time we bought 2 million shares, the stock skyrocketed and jumped up, almost over 100% from where it got down to. Right. We haven't started that buyback yet, but it'll start imminently. Right. Number two is I've personally been buying back a lot of stock, right? Because when you get mad,
and you've been doing that consistently whenever you've got an open window, right?
I'm now my hands, my feet, my mouth, I'm knee deep in. I've invested over $17.5 million in the company. I've been investing in everything from, I put in 2.8 million into the IPO at 4. I've invested as high as I think $6.40, right? And I still believe that we're going to go way higher than that. Right. And, just when I went through Digital Turbo, I went through the same thing. It dropped to 40 cents in 2008, and then eventually went to $100 plus.
And that was the ticker symbol on that was APPS. And I can attest to the fact that it actually did, because I was in at 80 cents and it went to $100. I didn't ride the whole damn $100. I think the last was in the 70s when I sold my last bit, but that was an amazing run, right? And
yeah,
I think
even today, it's almost $20. Right. I had like 35,000 options that I had left, right? That I kept, just, in case the thing just, literally was just, the next level moonshot, right? I'd sold, as you know, millions and millions of shares, and I sold the last 35,000 recently, right? What do I do with that? I put it back in, I buy back more of my company, right? So we'll continue to do that. You'll see the window open again shortly. You'll see the company buyback kick into place quickly. And we'll continue to strengthen the balance sheet. The second thing we did is we got all the senior debt to extend out 2 years, right? So $15 million of senior debt, which was owned by a firm called No Street in San Francisco. Jeff Osher, great fund, super smart, convertible at $4.50 a share, right? And we negotiated a deal to extend it out 2 years. So that takes the pressure off, right? Now management can laser focus on delivering, right, EBITDA and shortly cash flows. We haven't announced our cash flows yet, but you can't extinguish $20 million of debt without raising money, right? Unless you're generating cash flow. Right. The next thing I did is I wanted to highlight the remaining businesses without live and the success of them. So the first thing I've done is I announced the spinoff for our pay-per-view business, I'm sorry. Well, actually, I did. I announced the spinoff, the pay-per-view first, and then coincidentally, a bunch of banks and investors jumped in and wanted to come into podcasting first. So we closed an $8 million financing at a $68 million valuation into Podcast One. Right? If you're sitting down, we're trading at under 60 million, and our subsidiary doing 23% of the revenues was done at 68 million. Okay. So if you're sitting down this week by the 15th, I promised the street I'm going to file the S1. And if you read the 8K, the 8K says it has to come at $150 million or more. Hello. Right. So, you take your beating. Sometimes you trade above the value you deserve. Sometimes you trade below the value you deserve. And you got to fight through all of them. And what I can tell you is my team, I have a world-class management team. My CFO and the team have gotten to the bunkers, fought through this. They battled through. You're going to see more of that success coming. All right. This is our biggest quarter of the year, obviously. So it'll be our largest revenue number. All right. And you're going to see more EBITDA coming. And you're going to see more buybacks coming. All right. Here's the exciting part. I announced my audio business is going to do 88 million this year and $17 million of EBITDA. For the first half of the year, we did over $8 million of EBITDA. I think it was 8.7 million to be exact. Okay. These are really exciting numbers. And as you think of our audio business, which combines Slacker Radio and Podcast One, without breaking it out completely, I did announce record revenues for podcasting at 8.7 million. Right?
Right.
What's exciting about that? That division is going public. And in a market that has collapsed, Sirius Radio just bought a podcast business doing 10 million in revenues for $150 million in cash. Okay. Pretty amazing. We do almost 9 million for the quarter. Okay. So you can see where that value of $150 million or better can come from. And we'll be the only podcast business that trades publicly. Okay. Here's the exciting parts. Podcast One has had 2.4 billion downloads. It has over 7 million unique visitors a month. Okay. These are pretty staggering numbers. Think about
7 million unique visitors a month.
Unique. Now think about those numbers in any of the companies I've built, from i1.com, right, to Digital Turbine, right, guy, across the board, and going back even deeper into my career, if any, my background and all of them, I've never had a community of that size. That's one TAM. That's just podcasting. Well, if you deduct 8.7 million, right, for the quarter, and I think we said 16.5 million so far for the year, right, you're now on a run rate for your podcast business at $33 million, right, in that range or higher, right? That's up from 17 million when I acquired it. It was doing 17 million and losing 5 million. It's now EBITDA positive, okay? Now take out and say Slacker. Well, if that's 8.7 and 35 million, if I'm going to do 88 million, I'm doing over $50 million, right? I'm just on that audio side. And I'm doing over $10 million of cash flow, okay? So what's that division worth? And I'll just take a pause in that and everyone can think about it, right? That's over $10 million of cash flow, right? So now you got your audio division, okay? Now you got the next energy, which is I've now closed podcasts. I'm going to prove that I filed my registration statement this week, right? And then I'm going to do the same thing with my pay-per-view business, and I'm going to close a financing very shortly, right, by year end, with my pay-per-view business, which has tremendous upside. It did 28 million and $4 million of EBITDA during COVID. Okay. Imagine when live opens up. We've now proven we built the technology. We built the back end. We proved we could do over 200 different artists on our platform. We proved we can do over 200,000 transactions, right? Including 136,000 transactions simultaneously. I don't know if anyone else is doing that in the world, but gives us a big opportunity and gives us a big opportunity to do that for other partners as well as do it for ourselves. So you got multiple TAMs within the same space. Okay. I've just announced my first ever celebrity brand with Jeremiah, one of the great R&B singers, launching a wine company. Okay. With Jeremiah using his brands based without giving up the names, The name of his songs will be used to drive that, and he will use his massive following to drive that brand. This will be the first of many celebrity brands that'll launch within our merch business.
So that's your merchandise space, celebrity brand, and this is the first one, right? And what was your investment in getting this thing rolling? Do you mind sharing?
Under $25,000. Okay. So we're going to find out quickly, because what I did is I put Jeremiah together, right? I brought pop culture together. I put Jeremiah together with Russell Bevan. For any of you who are wine drinkers, very few people know Russell, but he's literally the number one winemaker in Napa, more 98 to 100-point wines than anybody in the history of Napa, and growing, and maybe becoming one of the best winemakers in the world. So we put together pop culture in that. We put together that team, right? We have a winemaker making the best wine combined with a superstar driving it off his social media and bringing that brand out. You're going to see a lot of that with our podcasters, with our musicians, with our social media stars. And I think you'll see one a quarter minimum, and it could be one a month soon, of celebrity brands that are launching.
And I think that's exciting, right?
Anyone that follows celebrity brands, one woman put Revlon into bankruptcy. One woman put Victoria's Secret close to bankruptcy. Rihanna, $3.8 billion on her lingerie line in the first 3 years. George Clooney and his tequila, McGregor and his scotch. And there's so many examples of it across the board. And and we just see a telltale sign that's going to continue to grow. I see my good friend Mark Wahlberg now promoting products on a regular basis off his social media. You see The Rock breaking every record. His tequila sold more tequila than any tequila company in one year, all based on him using his muscles and using his social media to drive those fans to buy it. So unique opportunity there, right? We announced our publishing business. Josh Hallborough joined us, becoming one of the stars of the company out of Rock Nation, literally launching our publishing business this weekend. And Tim, I should invite you down to this. You've been to some of my great events. It was kind of last minute, but literally this, I'm going to send you some video of it. If you look at that picture in the background with LiveOne, that's actually my backyard. We had a young man who just got chosen. First deal he did after signing our publishing deal with us. No money up front. Okay. Rev share for 5 years. He launched his publishing business. And the first thing that Joshy signed him to is he signed to do the new music for the first time in 50 years for the international Emmys. He's curating and being the composer for all of that. And when he curated and did the other night, it was truly one of the most magical music performances you've seen, with some of the top people in music joining. So you're going to see a lot more of that. We've now signed 2 kids into our publishing, right? Josh, in his publishing business, he built Rock Nation. Over hundreds of millions of dollars of revenues came out, including Justin Bieber's last song. 2 number 1 hits. And he's promised me the same thing this year. Almost no cost to us other than a lot of hard work and finding these great, super talented people. And you'll see more and more of us on the publishing side. Again, revenues, EBITDA, bottom line.
Right. I mean, you like to talk about the flywheel a lot, right? And you have put together that flywheel, and the way you did it, I mean, it's easy to forget about COVID because COVID is past, right? But think about what you were at the beginning of COVID, right? You were a live broadcasting company, essentially, right? LiveX Live, that's what you were. And you look at the company today, it's a very, very different company, right?
Yeah, I mean, start from, COVID hitting. We were doing $38 million in revenues, right? I pinched myself because my team did such an amazing job, of surviving, right? Because there was no capital markets, right? For a period of time, right? And then, not only did we restructure the balance sheet, but we delivered $116 million in revenues, right? And closed 4 acquisitions.
Without any live events.
Without any live events, all right? The only live events were digital live events. And the good news of that is you took your pound of flesh, because we had 2,500 of the biggest music events in the world signed, and we were streaming Rock and Reel with 90 million people watching, and EDC, China, Japan, and Seagate in Budapest. And we'd really built, an amazing platform for live content, right? The good news that came out of it is everyone woke up, they got no choice. They have to stream, right? When 90 million people watch Coachella and 90 million people watch Rock in Rio. Well, one of the things you're going to see in our pay-per-view is we're the first digital company ever to stream the biggest music events in the world in VR, right? We're the first ever to have a fully immersive experience. You could chat, message, buy a hat, buy a t-shirt, buy an NFT. We're the first to combine pop culture. Well, now you add the next ingredient to it is as our pay-per-view business gets financed imminently, right? Think about launching the first ever pay-per-view festival. If 90 million people watched, do you believe that if 1 million people attended Rock in Rio and 1 million people attend Coachella, do you believe that 1 million people will watch for 10 cents on the dollar? Well, guess what? Music tickets have skyrocketed. The average ticket to Coachella this year is $312. Okay. If we could sell it 5 cents on the dollar for $15, we could sell 1 million tickets. We just changed the music industry forever. And guess what happens to LiveOne? Our pay-per-view business does a fortune in revenues. So stay tuned for that. And, we were an inch away from launching the first ever pay-per-view when COVID hit. Set us back 3 years, but it's coming soon.
So I guess the take from this is, Rob, you're not sitting idle. You're not bunkered down somewhere just waiting this storm out. You're actively doing things to continue to add value to the company, right?
I mean, listen, I have 4 children. I'm on a plane 100 days plus a year around the world. We didn't stop during COVID because I believe that you need face-to-face, especially as a small company. We had to do some really tough, difficult things and cutting costs, right? And cutting expenses. We had to negotiate hard with our creditors and our debt holders, right? And we had to prove we could survive. And if we prove we could survive, we can come out the other end, right? Here's the exciting part of our business is we're still the only ones in the world who are doing what we're doing. We're the only ones that are delivering a super high-end membership program to music, right? For 1/3 the price of everyone else and providing all this original programming and all of it with not spending a single dollar in marketing to try to chase an individual consumer.
I actually wanted to bring that up. Your subscriber acquisition cost, right, is, you don't spend a ton of money on marketing this thing, right? You're not chasing people.
So Tim, going back to you learn from your mistakes. I owned Kazaa 10 years ago, and my stock went to $1 billion. It was a great run, and I raised a lot of money, and then I bought companies and had a huge success out of it. And great, but Kazaa never worked. And the reason it didn't work is not because you didn't sign subscribers, is because the churn was too high, and the cost of acquisition at that time was $46. Well, now you're up against Apple and Amazon, right? And YouTube, and they're spending $86 a sub. Well, that is an impossible feat to get a consumer for that price and try to make money. Nobody has proven it worked. So we did is the same thing I did in Digital Turbine. I built in partnerships with companies who have, right, with companies and celebrities who have 10 to 2.5 billion followers, right, like Facebook, right? And so we cut our teeth in this and said, let's do B2B deals with the automotive industry, right? When I bought Slacker Radio, we were doing $210,000 with Tesla. It's now 23% of our revenues. Okay. We grew, we handheld them, we discounted our price, we still delivered huge margins on it. We serviced them to perfection. Right. And so now we've grown and we're going into our 9th year together, right, in January. And that's going to continue to grow. If that grows even at 50% of what it did this year, right, you're going to have over $20 million of EBITDA next year. If you have over $20 million EBITDA, we're trading at 2.5 times EBITDA. Okay. Right. We're already trading at 50% of revenues. So we become a value stock. And we become a value stock in EBITDA. And the next thing is going to be what kind of cash flow we're throwing off. Well, if you take those costs out every quarter, those costs keep coming out, right? Because it takes a period of time before the severances or packages come in. You're going to continue to grow.
And those were some hard choices, right? I mean,
oh, man, I lost some of my dear friends and really close confidences in the company. And, you had to do what you have to do because the end of the day is it had to be how much revenues you're delivering, how much bottom line you're delivering, right? Versus the cost of your salary and all the expenses around it. Right. If that didn't pay off, then you had to make the cut. So it was a hard dynamic for me. And I've been there before. I saw the temperature changing. As you know, Tim, we talked about this, 18 months ago? I started making those cuts almost 18 months ago because you typically have cycles of 6 to 10 years in the market. We've had a 12-year cycle, right? And, there was so much fluff in this market and valuations got out of control. And unfortunately, everybody suffers the same pain, when it comes. When the cycle changes, right, and it changes quickly, right, that movement of money moves to very different places. And as interest rates go up, money moves into bonds and into, dividends, right? We're not a bond or a dividend. We're not going to be a dividend company. Probably, I don't think I've had a single one in my career that's become a dividend company, but they've all achieved hitting, at least $500 million of value. And most of them have achieved over $1 billion. And as you know, Digital Turbine went to 12 billion. All right. So yeah, we're in the trenches here. We're more excited about the business than ever. We still got work to do. It's not going to be easy.
Let me ask you a question. How many music services out there, Rob, are profitable right now?
It's a great question because, you'd have to dissect, right? I'm sure Apple and Amazon are losing their shirts on, right? Spotify can't make money, right? Sirius is the only one that's profitable. And other than that, Deezer's losing a ton of money. I think they lost 170 million. Tidal sold for $400 million. They lost $76 million the year they came in. They've blown through hundreds and hundreds of millions of dollars. Right? We took Slacker Radio from losing $10 million. The first year we acquired it, we did $1 million in EBITDA. The second year we did over 4 million. This year, for the first time ever, we said we're generating over $10 million of cash flow. So we'll keep looking. We'll keep looking at cuts. We'll keep looking at, ways to monetize it. And then, you got to talk about, where the upside is. All right. I just partnered with Android Automotive. Every car in this world in the next 5 to 10 years, 50% will be Apple, 50% will be Google, just like your phone, will be the operating systems of the car. As that happens, those operating systems, we love the partnership with Android. Gives an opportunity to expand overseas, gives an opportunity for us, who's the only company I know of who will white label and allow you to use your own brand, right? Because we're a B2B play. So Tesla isn't Slacker Radio or LiveOne. Tesla is Tesla Radio, right? And a watch company, a athletic equipment company, a Walmart of the world, a Costco of the world, a JetBlue of the world, and a loyalty program can have their own music service. And the reason that Elon is so much smarter than the rest of us is he knew that if he changed it to Tesla Radio, every time you get in the car, you think that he understands music and you think that he is choosing your music for you because it's Tesla Radio, and it's just genius. Right? I now have 4 Tesla cars, and the best car on the road. But on top of it, it's just amazing how well he thought out how he's talking to his consumers every day. And I think many car companies, we're now in 86 other cars. I think many car companies are going to be thinking this way as you move from sort of commodity, low interest rates to high interest rates. It gets a lot harder for them to make money. Right now is going to be a time they're going to have to figure out how do you have a direct relationship with your consumer. And I think anyone with 10 million to 2.5 billion eyeballs as a consumer is a potential B2B partner.
It's funny. If you think about Tesla, right? You think about all the commercials you see from all the different car manufacturers. How many commercials do you see from Tesla? I don't ever see any commercials for Tesla, right? There's no marketing for Tesla, but he sure sells a hell of a lot of cars, right?
It's just starting. Remember, he was selling those cars. You and I talked about before. He was selling when he had no money, right? And when COVID hit, right, it was almost down to zero cash, right? They fought through, they battled through. Now they have 20 billion in cash. 20 billion in cash buys a lot of market share, especially when you have, way less debt than any of your competitors. He's going to buy up market share, and every car that hits the road, we're going to grow. There's an opportunity for Europe. Spotify charges $8 a sub, right, into their cars. They got that contract when RDO went out of business. We charge under $3.50 a sub. You get to 1 million cars, it's $4.50 a sub, right? That's 4.5 million a month. That's 50 million a year. Take their multiple of EBITDA, it's a big win. There's opportunities to put video in the car. Right. As you know, there's now 2 screens in every Tesla car. There's one in the back. My son was watching LiveOne in the back of the car. Maybe there's some more money there. We've just added all our podcasts in. So you could put up your Spotify and Apple podcasts. Actually, not Apple today, but only you could put Spotify podcasts or Sirius podcasts. But if you go in the car, the only thing you see on the screen is you're going to see LiveOne's podcast. First time ever, we've been able to advertise in the car in that our creators, our 325 podcasters, get to talk to that audience. Right? Big opportunity to sell merchandise, big opportunity to upsell, right, the customer base.
And then at some point, the live business also comes back, right? I mean, right now you pulled that back, but at some point you're gonna move forward with that as well.
Well, 2 pieces of live. The live part, the digital live, the live streaming, we're full speed ahead, right?
Okay.
That's on fire, right? We've had 5 billion engagements, not even just viewing. That means the consumer not only watched it, but then put a LiveOne video out to their social media, right? So the digital side of it's exploding. It's now time to move that to pay-per-view. We've done 100 plus events in music in pay-per-view. We've tested it. Our tech is there, right? Everything's ready to go for a big event, right? It's going to be the right big event. And you get that big event, again, those numbers could be staggering. As you know, we did with Social Gloves, we did over 15 million in revenues and over 3.5 million of EBITDA, right? A lot of these will be at risk. The only other live events that we're doing digitally is if a sponsor is paying for it, right? We're no longer buying those rights because we've proven how great a job we do producing them. So we're getting hired by eBay and Hyundai and Volkswagen, and you've seen all the events, Tim. It's staggering, right?
Your sponsorship has grown dramatically, right?
So our sponsorship with the acquisition of Podcast One, adding that sales team, and as anyone who follows radio, they're the best salespeople in the world. There's no one better that's selling than radio guys. They've learned to sell video now. So now that they're selling video, they're upselling all of our events, and they're bringing those same tier sponsors. We went from 7 sponsors pre-COVID to over 300 last year. This year will be well over 500 sponsors on our platform, and more 7-figure deals than ever in the history of the company. We were 95% subscription going into COVID. We're now 50-50. All our other revenue, sponsorship, direct response, and so on, and the rest and so you're now 50-50 between subscription, sponsorship, and advertising.
Right. So let's talk about where the stock price is today, right? It's been rough. I mean, no doubt about it. I view it as this is an opportunity, right? I actually look, I've been through bear markets. A lot of people for the last 14 years they've never been through a bear market. They don't even know what a bear market is, right? We needed this cleansing is what I call it. But when you get a cleansing like this, a lot of great companies get put at valuations that don't make any sense, right? So they're reacting to the overall market. Everybody and their brother seems to know we're heading into a recession. Everybody is saying we're going into a recession. And my view is this: when everybody knows that we're going into something, that's usually when we do the opposite. I think we've been in a recession for a while, right? In certain sectors, we've been in that. You got companies that are down 90%, but you know what? They grew their business. They strengthened their company. They didn't weaken. They didn't go in, do a bunch of death spiral financing. They're in good position and they've got a great product or service, and they've gotten no recognition from Wall Street at all, right? At some point, and what's interesting is a lot of them now are just kind of going sideways, because what are they going to do? They're down 90%. You're going to go down another 10. That's zero. Game over. They're not going out of business, and there's no reason for them to go out of business. If you know where they're at, this is the time when you buy with both hands. That's my view, right? Because I think in the next 12 to 24, a lot of wealth is going to be created. That's my belief.
Listen, again, 2000, it was top of the ski slope to the bottom. Everyone lost everything, down 70, 90%, right? 2008, same thing. This has been different, right? This is 15 to 18 months of just pure unadulterated pain, right? You wake up in the morning, your stock's up for a day, it's down the next 3 days, right? You wake up, you go up. It's almost the better news you announce, the worse it gets, right? Because people look at opportunities to sell into good news, right? You think it's the end of the good news. So, listen, you got to be resilient. If anyone listens to the podcast Acquired, it's so genius, right? Whether you listen to Elon Musk story, the Jeff Bezos story when he went to $1, whether it's Steve Jobs when he went to $1, you listen to these stories and it happened to so many companies, right? They described it as resilient optionality, right? If you can buy a management team, right, at 60 cents when they did their IPO at 4, right, and they're doing 5 times the revenues today of what they're doing before, and you can actually look at the metrics and see that they're trading at 50% of revenues or less, and they're trading at 2.5 times next year's EBITDA, you go back up the truck and you buy everything you can. You're going to sweat it out. It's not going to be easy. They're never easy, right? And you're going to wake up and you're going to close your eyes, and somewhere between a month and 24 months, you're going to get a 3 to 10 times your money. And then you could get way more than that, right? This is the times you could get a 30 to 100 times your money, and you can get it because of the performance as opposed to some of the silliness that we all won on, right? I had stocks go from 1 to 80 during COVID that, didn't even make any logical sense. And I just said, thank you every day, right? Now I want to be in the position that, this is my humble opinion, is we're going to go through a tough period, right? I don't know if it's recession. I'm not smart enough to figure out the macro level of inflation and recession, but I know one thing: we're kind of in both for the first time in a long time. They're both hitting at the same time. You can't find a hotel, you can't find a plane, you can't find a boat. Every price has gone through the roof. But what's scary is when you walk in the supermarket, a tomato and a cucumber, so on, right, has gone through the roof. So I don't know which one we're in, but I know this. I know that this is where all the money's made. The choices are going to be more selective. There's going to be a stock picker's market, and you pick the jockeys and you fight with those jockeys, and then you pick optionality, right? It's hard to imagine. We didn't see any optionality during this window. Now you have this great opportunity to pick optionality, and you don't have to buy options. You get to buy stocks. So
Right.
this is where, candidly, Tim, I've made all my money in my career. All right. I've gone through with every one of my companies cycles. And I've also gone through it with companies that I'm investing in. You're going to go through those cycles.
Right.
This is that exciting opportunity. If you have staying power, right, and you're a real believer, build a relationship with your CEO. Make sure you know who the team is. Make sure they're going to be there long term, and you're going to make a hell of a lot of money.
And this is, you just nailed it, man. And this is why we're having this conversation, because here's the deal: I don't interview anybody that I don't think is going to make their shareholders money at some point. I won't interview a company that isn't that I don't feel has the ability to make their shareholders money, right? I look at this company, I look at what you've done, I've looked at what you've accomplished, and it's not just this company. I'm not going off of just this company. I'm going off of you as the jockey, right? I understand who you are. I understand how hard you fight, right? And I know you've been through some battles, and you know what? Is it always peaches and cream? No, it's not. But where do you wind up coming out? Usually on top, right? And Warren Buffett, I think, said once, patience. The stock market is a really efficient tool for taking wealth from the impatient and giving it to the patient, right? And that's what you have to have here. I mean, I know it's brutal, it's hard. But you know what? If your dollar cost average is $5 a share and it's sitting at 60 cents, you believe in the company, you believe in management, you believe that they've executed through all of these challenges, the war and all this stuff, right? Then you should feel like this is awesome. This is a gift. This is an opportunity for me to double or triple up my position, right? I mean, I'm not going to tell anybody what to buy. It's not what I do. All I do is present the story. And either you get it or you don't get it. But, as I look at this chart, and maybe everybody can see it, but from really to, 20, what is that? 2021 or 2022 to 2023. I mean, it's been trading in a box. It's basically trading in this box from here to here. It's consolidating. You had the little breakout there. You had a head and shoulders pattern where now it's pulled back. But you know what this is right here? This is a double bottom, almost to the penny today. Where it's tested, it came down and it hit this low and it bounced right off of it and closed in the higher portion of the candle today. Where's LVO going? I don't care how rough the period is ahead of us. And do I think that it's going to be a recession? Look, I'm seeing gas prices. I just paid $3.99 a gallon. Holy shit. I haven't seen $3 in I don't know how long. Supply chain issues. There are no supply chain issues anymore. And now, not only that, there's inventory build. So what does that mean? People got to start selling their inventory, and to get rid of it, they're going to lower the price. I look at, all these eggs that are $18 for 36 eggs. I used to pay $8, right? Is that going to last forever? No way. No way in hell is that going to last forever. Energy is a big portion of our inflation. I know that homes in Las Vegas that are up for sale, we were averaging 1,600 homes a month. And then we're at over 8,000 homes for sale, right? Why is that? Because of all the interest rate hikes. I think he's overdone it personally, because that stuff doesn't even work all the way through the system. Think about the credit card debt that people are going to have to pay, what they had and what they're now going to have to pay in interest. I mean, there's a lot of things that have not worked their way through the system yet. And my belief is a lot of the problems that we had are abating. We have inventory builds that are going to, I think, bring down costs, and energy is really the biggest problem. That's the only thing that we can't seem to address, right? Raising interest rates is not going to bring oil prices down. Not going to happen. So I think I think the worst is done I really do. I believe that the worst is we're closer to the bottom than we are the top. I'll tell you that. And if I look at your stock, it's been trading in a box. You're at the low of the box. You just did a double bottom test. I don't think it's going lower, man. And if it does, I'll bring it, because I'm gonna buy more. That's my belief. And I think, you are a jockey that I want to partner with. But this is a company that is growing. It's got a lot of exciting stuff coming out and unique stuff, right? The merchandising that you're going to be doing with these. It only takes one big hit would be a nice home run, right? I mean,
you don't even need a giant hit, right? You just think about when you're doing $100 million in revenues, you get 10 million bucks and you're at 110. You get 20, you're at 120. You get 50, you're 150. These are products that are taken off in 1 to 3 years to do $1 billion. All right. So we're going to be in the trenches with them. We're going to have the talent behind us. Right. And Tim, I totally appreciate this, because you've been, not only a fan, but you've been respectful throughout this. You've understood the market conditions. It seems like everyone forgets market conditions during these days, right? It's amazing how many people who have been around for more than an hour, right, forget the market conditions. But these are cycles that we all go through. And if you believe in the cycles, that's when you make your bet. All right. That's when you get rich. Right? If you liked it at 5, you got to love it at 60 cents. If you like it at 60 cents, you got to love it even more again when it runs to $1, because you know it's going back to 5. The cycle always changes. Stay in the game, fight hard, stick to the positions you really truly believe in, and make sure those metrics and economics make sense in this environment. It's a different environment, right? Yep. This is an environment, revenues, EBITDA. Story stocks are going to have a rough time for potentially the next 2 years.
Agreed. But you know what? I don't believe you're a story stock. I mean, I just don't. And I think it's undervalued. And I think this presents opportunity. And if anybody's listening to this, as you're listening to this, does he look nervous to you? You feel nervous at all, Rob?
Not at all. Not at all. I'm excited. And you'll see me again. I just bought stock a couple weeks ago. As soon as the window opens up, I'll be buying more, right? The company's going to buy back a lot of stock. right? We announced $2 million worth of buyback, right? There's some elements to that. Like I have to do less work if there are less shares outstanding because my earnings get higher, right? The less shares that are outstanding and the less buyers I have to find. So this is pretty unique when you raise money. All my money was raised, right? Almost every dollar was raised between 4, and my debt is convertible at 4.5, right? So, when you could buy it back at pennies on the dollar, right? It takes away a lot of the hard work. And I hate it, but I love when my people make money. I love my investors make money. Tim was there when it ran to 7.5. It traded almost 100 million shares. A lot of people took a lot of chips off the table. All right. We're going to do it again. And I'm positive of it. I'm confident. I feel great. Right. I got in the bunkers. Literally, I'm in the gym at 6:00 in the morning every single day.
One of the hardest working, listen, and I want to emphasize this too. He's one of the hardest working CEOs I've ever met. I mean, I will get texts from him I've gotten him at 5 a.m, and I've gotten him at midnight. I mean, I got him on the weekends. I mean, it doesn't matter. There is no day that you're not working, man. And
Never.
I don't know when the hell you sleep, honestly, because you are just constantly on the go. You left, what was the LD?
You know what that is?
And on a red eye to go over to Think Equity, right? Yep. Who else did that? Nobody that I know.
Nobody. So, and we'll continue to do that, right? We got a lot of great conferences coming up. We got Needham, we got JP Morgan. Imagine, little LiveOne is presenting at JP Morgan conference, right? We'll present at Citibank this year. We'll present at Riley this year, right? We'll present at Roth, of course, this year, right? So we're getting bigger, right? Even though the valuations come down, right? Soon you'll see some new analysts come in. You'll see some new bodies come in, right? Who now can look at the company at $100 million or better, right? And it's time for us to ring the bell again. I'm here doing it.
All right, Rob, man. Thank you again for coming in to do this. And we'll I don't know, when you have something significant, maybe after the spin out, right?
Yeah, plan on coming in for January 24th. Okay. It's gonna be a very, very special, epic event. As you know, I lost my partner, Norm Patitz, one of the legends, right, in radio, music, podcasting, built Westwood to $5 billion. He passed away on Sunday. So plan on being here on January 24th. It'll be an honorary, memory for Norm, but it'll also be one of the great LiveOne music events you've ever seen. And as you know, we did some pretty cool shit. We did some pretty cool stuff together, right? Who was it? Nelly and Trey Songz performing together.
What's that?
Who'd we have? Nelly and Trey Songz in Vegas performing together for the first time ever, right? Yeah. So I just saw, when we did St. John and broke him. I saw when we broke Kid Leroy. This stuff's popping back up, and I'm starting to get those phone calls again, emotionally, about what this company's done. We've broken some of the biggest artists in the world, and we play with on a regular basis. Everyone from Justin Bieber to Bruce Springsteen to the Rolling Stones have all performed on a network, right? And all hit their social media and told their fans, come watch in LiveOne.
Look, man, you got to do something with Red Hot Chili Peppers, because I kind of got screwed out of the concert they were just at here.
Yeah, no.
And they're one of my favorites, man.
My club in London, Coco's, when I owned it, the Chili Peppers would break their albums every time. I love them. We'll do that. My wife went on a couple of dates with them. So, before I met her, and,
is that right?
The last time we were up on stage in one of the festivals, and he comes running down to give her a hug. I had to fight him off. So.
All right, Rob, man. Thank you, man. Thanks you for doing this.
Thanks, man. Thanks, Tim. I appreciate you.
All right.
Bye.
Bye. Hey, this is Tim. I want to thank you for tuning in to watch this interview today with Rob Ellin, CEO of LiveOne, ticker symbol LVO, listed on the NASDAQ. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And while you're at it, how about giving us a follow? Till next time, stay safe. Alpha World Trading wishes you the very best of success.